Good afternoon. Good afternoon. Hello, everyone. Hello to you, Mike. How are you?
I'm doing just fine. How are you, Lauren, today?
I'm good, thank you. We've got some stuff going on, so I'll go ahead and jump into the intro while everyone continues to come in, and then I will share about our current grant opportunity, and then I will pass it over to you. How's that sound?
Sounds good to me.
All right, let's get this screen shared properly, hopefully. And then, all right. Mike, can you see my screen okay?
Yes, just fine. Thanks.
Okay, perfect. So good afternoon, everyone. My name is Lauren Simpson. I'm with the SBDC, or the Small Business Development Center. We're a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. Now, we offer no-cost services to you because your tax dollars have already taken care of our fees. For the Los Angeles network, we represent or we assist the Los Angeles, Santa Barbara, and Ventura counties. So if you are a small business within either of those counties, please be sure to get in contact with us. You'll see that we have physical locations in several different cities. We're in Camarillo, Santa Clarita, Pasadena, over to Laverne, throughout Los Angeles, the South Bay, as well as down into Long Beach. Now, I mentioned you getting in contact with us, and this is why. This is why you should. So we offer no-cost business advising, and so you're able to meet one-on-one via Zoom or a phone call with one of our business experts. And they have expertise ranging in the arenas of marketing. There's taxes and finance, of course. And Mike would be perfect for that. And then there's also business planning. So if you're just starting and you'd like to create a business plan, we can help you. If you're looking to adapt and grow, we have an ACT team. And so they can assist with like funding and loans. And then if you are, again, looking to have a marketing plan created, or if you're a handyman looking to go into construction, we can assist you. So please be sure to get in contact with us. And then we also offer virtual trainings, much like the comprehensive workshop you've joined today. So again, get in contact with us today. We're excited to get you started. You can reach us by phone, 866-588-7232, or you can go to smallbizla.org/new client if you'd rather online. And then if you are outside of the Los Angeles, Santa Barbara, or Ventura counties, please go to americassbdc.org/find your SBDC. Mike, I'm going to stop that screen share.
Okay.
Go ahead and bring up an additional screen. We have it's our current grant opportunity. We've partnered with the County of Los Angeles, as well as Lindustry. Here we go. Who is dispersing the funds. So here it is. It is called it's the Economic Opportunity Grant Program, or the EOG program. You'll see these are the partners here, everyone who's involved in getting this grant together and out to everyone. You'll see that it's Los Angeles County's program that is actually open right this second. We have both phases 1 and 2 that are open. Phase 1 ends May 5th. It has been extended, to May 5th. Initially, it was closing in March. And then we have phase 2, which closes May 20th. So I've brought up the screen here. You can see for micro businesses. We also have small businesses as well as nonprofits. Now, the small businesses and nonprofits are going to be phase 2. And then for phase 1, it's all for micro businesses, those businesses with less than $50,000 in revenue in the 2019 taxable year. If I continue on this homepage, you can also see more about the LA County Department of Economic Opportunity, as well as the SBDC. And then if I click over here, so if you look at the very top, the 4 tabs going across the top, if we prepare to apply, you can see here on the far left, we can change the language. There are 14 different languages you can choose from. And then if I continue, you'll see more about the program here. You can sign up for an info session. And so it is a webinar, much like the one you joined today, where you can go in, hear a presentation that just dives through the application process as well as the application itself. We have sessions specifically for nonprofits, Mike, on Mondays at 9 a.m. in English and then at 1:30 p.m. in Spanish. And then we have, let's see, we also have office hours. So you can actually just drop in, ask your question or two or a million, and then get your answers, and then you can hop out. Let me keep going. And then finally, we have in-person events. We have 2 coming up. So we have one that's going to be on Monday. We have actually 3 coming up. So we have one on Monday that'll be catered specifically for nonprofits. I do not have a link yet, but when I do, I'll be happy to share it. And you can always monitor this website. Let me come over here to this next tab, Get Help. If you scroll down, this tab here, if you are looking for info sessions or sessions in general, come here, sign up. It takes you to our calendar. This calendar is specifically for this program. And so you can see all the events that we have going on. See, I mentioned every day, we've got stuff going on every day, even Saturdays. But we have an event that's going to be on Monday, like I said, the 17th. And that's going to be in downtown LA. It's a event specifically for nonprofits. You can actually walk in, make an appointment, go in and get application help right there on the spot. And we have 2 events in Compton coming up. Looks like we've got one on the 25th and one on the 18th. And then Mike, you were just talking about an event we are having in Long Beach.
Yes, that's right. I'll be there.
You will.
Yes.
See there, you guys can come and see him. Monday's event, I'll be sure to put actually all the events I mentioned into the chat. The only one that won't be in the chat is going to be that one that's the nonprofit, unless we get lucky and I receive the information before the session ends. So if I quickly go back, you can also come to this website and apply now, and it'll take you directly to the application page. Here's all that information. You can dive in and start the application. Mike, I know I kind of ran through it, but hopefully it was helpful for everyone.
That's great.
Okay,
there's a question, Esmeralda wants to know, if she's starting her business and doesn't have a 2019 income tax return, does she qualify for this grant?
Oh, sorry, I was trying to answer live. So the income tax is a requirement for this grant, and they're not just looking for one page, they're looking for the entire document to verify your business. If you still have questions, I will drop in the 800 number. It's an 866 number, if I'm not mistaken, that into the chat, and you can give our call center a call. Give them a call, ask them the same question, and if there's any kind of thing that they can work out, they will.
All right, thank you for that. One piece of advice, because I've been through this on-site live with various clients, bring your documents.
Yes.
Don't show up at an event without having all of your documents together, your tax returns, your organizational documents, like your LLC filing or your corporate filing, your business license, your ID. Otherwise, yes.
Or matricular card, please.
Right. And be sure you have a business bank account that you can access. Know your passwords.
Correct.
Because in order to apply for all of this, you need to provide all this information at once. Okay.
That is correct. And Mike, if you don't do online banking, then you can also just bring I think it's 2 months of your banking statements. Bring those in. But like Mike is saying, please bring in everything, because it's a one-stop shop. You'll be able to bring in everything, and then someone can walk you through the process. And when you leave, you'll be done and waiting to hear back.
Additionally, if you scan everything in, because it all has to be uploaded before you come to the event, that'll make things a lot easier.
Yes.
Okay? Because everything's done electronically.
Very true.
Somebody wants to know, they applied as a small business, but now realize they're a micro business. Do they need to reapply? You have to think about that.
I'm going to insert, I'll send you my email address. I'll put that into the chat. Shoot me an email. It's my understanding that I believe you would then qualify for phase 1. It just depends on when you applied. But shoot me an email and I'll follow up with you.
All right. Thanks for that. I appreciate it.
Sure.
I'm going to move forward with the presentation. Please keep your questions and comments in the Q&A, A, and B, to the topic at hand, because we have limited time. Couple of points. For those of you stressing over the tax deadline, you don't have to stress much anymore. April 18th is the IRS filing deadline. However, it's been extended for all of California to October 16th for business and personal taxes. So if you were worried about getting it all done this weekend, as many people do, as I was going to do for that matter, you can stretch it out. So please keep that in mind. Okay, I'm going to go ahead and share my screen. This is a list of structures, legal structures. We have sole proprietorships, we have LLCs, we have the alphabet soup of corporations, and we have partnerships. With each one of these structures, other than a sole proprietorship, you need agreements and contracts. So LLCs require operating agreements. Corporations, no matter what type, need shareholder agreements, other than nonprofits, because there are no shareholders in nonprofits. And partnerships need partnership agreements. If you cannot produce appropriate documentation to prove that you are actually have an LLC, corporation, if you don't have all these documents, should you be sued for your business activities, you may lose your protections against lawsuits, because you have to act just as every other business, which means you have to prove that you have appropriate agreements in place. For corporations, you have to prove that you're keeping minutes, with one exception, that's closed corporations, and that you have a board of directors meetings. Even if it's meetings with yourself, okay, you have to prove that there's a partnership agreement in place. What often happens is that people form entities by filling out a form. Anyone can fill out a form. The forms are all available at the Secretary of State site. They're easy to fill out. But what they don't do is they don't have an agreement. They don't have the shareholder agreement. They don't have the bylaws. They don't have the operating agreement. LLC owners are referred to as members. The agreement that you need for an LLC is called a membership agreement or an operating agreement. And even if you are a single member LLC, you still need that operating agreement. Corporations, it's a shareholder agreement. Remember, there's no shares in an LLC. There's no stock in an LLC. So it's not a shareholder agreement or stockholder agreement. It's a membership agreement because you're a member of that LLC. And there's bylaws with corporations, and with partners, it's a partnership agreement. Now, you may have filed to form an entity, and you may have done it through LegalZoom or one of their competitors, which, by the way, in my opinion, is a mistake. You should always go through a professional attorney. And maybe they provided you with an agreement. Maybe they provided with bylaws if they did it right. I've seen LegalZoom provide templates to business owners, and they don't even write the name on. They don't even have the right name on the agreement. Not the right name of the business, not the right name of the owners. If you have not read your agreements, you need to understand them, because you're supposed to abide by the terms in those agreements and the bylaws for corporations. So I'm going to share with you some sample model agreements, and we'll go through these. So this is an operating agreement that was issued for a client. I have not revealed the name of the client in this, okay? So let's just call it Productions LLC. This agreement was written by the USC Legal Clinic, and anyone can access the USC Legal Clinic, okay? And it was drafted into by April 13th, 2022. And this is a single member LLC, okay? Totally acceptable, and you need to have this in place. So all contracts usually have some sort of definition, by the way. So an LLC is covered under the California Revised Uniform LLC Act, and you can look it up. It's California Corporations Code, section 17701-01. It's easy to find this stuff, okay? And notice it's referring to a member. because the owner of this business is a member in his own LLC. Okay? So the articles of organization is the form that is filed to form the entity with the California Secretary of State. You can find it on the site. It's a simple form to fill out. Okay? We're calling this company Productions LLC. Okay? Now, an LLC, a corporation, or a partnership can also do business under a trade name by filing a DBA with the County of Los Angeles. As a matter of fact, you're required to. So we could have Productions LLC, DBA doing shoes, Mike's Shoes, okay? So keep in mind, Mike's Studio, that if you want to use a trade name, then you must register a DBA with the County of Los Angeles. It's $26 for the filing, $15 to get it notarized and have it published. It's another $50. So it's $100 to register a DBA. And that's done through the LA County Registrar's Office in Norwalk. That's the closest office. Okay. So if you're going down here, you must list a principal place of business. Now you're keeping this document. You don't have to give it to the state of California, but you need to have this available. Should someone ask for it, you need to understand the terms of this agreement. Okay. So this person has an address here. Okay. I should not have kept the name in, but there has to be initial capital contribution. Okay. That contribution should be listed in your agreement. All right. In this case, it was $20,000 approximately, plus an advance of $95. So if you have put money towards your business, initially, when you set up your LLC, it should be identified in this agreement. Okay? Because it tells the state, and then once looks at it, that you're actually contributed to your own business. Okay? Now, this is why it's called an LLC. No member shall be personally liable for the debts and obligations or expenses of the company, unless it's expressly set forth. What is limited in a limited liability company is the investment of the member into the LLC. Certain professions cannot form LLCs, medical professions, accountants, engineers, architects. They're not allowed to form LLCs because the state of California does not want to limit their liability solely to their investment into the entity. Okay, so if you're a professional, if you're in a licensed profession, other than contractors, you can't form LLCs. And there's an entire list that the state of California has as to who can form LLCs, as to who cannot form LLCs. Okay. Distributions are distributions out of the entity can be made at certain times. Okay. And now there are member managed LLCs and manager managed LLCs. When you file your document with the state of California, articles of organization, you have to identify whether it's a member managed LLC or a manager managed LLC. The vast majority of people that we speak to don't have managers, so it's usually member managed LLCs. Okay, you need to determine yourself, you need to assign yourself a role, such as CEO or president. Okay, and you can have some competing activities. All right, and that's okay, according to this agreement. You need to keep really good accounting records. You have to determine your fiscal year. In this case, it's the calendar year. Most people choose calendar year. You need to have your accounting records kept clean. You need to have your books and records available should someone ask for it. You need to set up a business bank account. Okay, prepare your tax filings. Now, there's a particular process to follow if you want to dissolve your entity. There's a filing done with the state of California to dissolve your entity. And in this case, it specifically identifies what happens if this dissolution. You decide you don't want to work in your LLC anymore. You want to just leave it dormant. Well, guess what? The state of California doesn't care because you still have to pay your fees. It's $800 minimally. It's paid to the franchise tax board. the state of California is giving a franchise to operate in the state of California. You can't just walk away from the franchise. Unless you file a formal document with the state of California to dissolve the entity. Okay. By the way, that $800 is minimal. When you get to $250,000 in gross receipts, it's $900. When you get to $500,000 in gross receipts, it's $1,700. You can lose $10 million. State of California doesn't care. Inactivity is not an excuse for paying the fee. Plus they'll chalk around penalties and interest. Now, because of the COVID pandemic, Governor Newsom signed into law a waiver such that if you form an entity in 2023, for example, an LLC, you don't have to pay that first year franchise fee until 2024. Okay. And that was also true in 2022. If you formed in 2022, you didn't have to pay it until April 15th of 2023. But now that's been extended to October 16th. So if you formed an LLC last year or a corporation, you don't have to file your tax return until October 16th of this year. Okay. So this defines what happens should there be a dissolution event. Right? First of all, there has to be a writing and consent. Maybe there's unfortunately, a member passes away or incompetence. All right. And if that happens, there's a personal representative that is assigned, or a guardian or a conservator. And that conservator will exercise all of the member rights. So if someone may pass away while the LLC is active, that doesn't mean the LLC automatically gets dissolved. It doesn't work that way. A personal representative will stand in for the owner of the LLC. Okay. And then if there's a dissolution event, the member shall execute a certificate of dissolution. Okay. And then there has to be a winding up of the affairs. There has to be a liquidation of the assets. It has to be distributed. There's all sorts of legalities that have to happen here. Okay. And there has to be a distribution appropriately to the claims of the creditors and then to the member. And there has to be a certificate of cancellation issued on a form prescribed by the secretary. Okay. Now, this is important. Whether or not it's a single member or a multi-member LLC, there's usually some sort of buy-sell clause. These agreements are the on-ramps and off-ramps to the businesses. And again, if you haven't read yours, you need to understand them. So in this case, no member shall be entitled to transfer, assign, give, convey, sell, encumber, or in any way alienate all or any part of the member's interest in the company unless there's prior written approval. Now, this could read members. So if all the other members don't agree, then we got a problem. Okay. Now, if there's a transfer of the interest, it shall have the right to become a substitute member only if the member consent is given in accordance with section 11.1. And this person pays reasonable expenses. The point is, know what you can and cannot do with regards to transfers of your interests. The buy-sell clauses are important. If someone passes away and you're a multi-member LLC and you don't have a buy-sell clause, which gives the other members first right to buy, then the remaining member is now in business with the heirs of the member that passed away. So there should always be a buy-sell clause. Okay. And if you don't know how to do that, this is why you need to go to an attorney. You're not going to be going to somebody that just fills out a form. Okay. So in this case, there's insurance matters. Every company should have insurance. Okay. And if there's a lawsuit against the company, the appropriate insurance should be in place to help protect that member, director, or officer. Oftentimes it's called a directors and officers insurance. Okay. And down here is the legal statement stating that the agreement shall bind and are to the benefit of the member and their successors and assigns. Okay. And any amendments must be in writing. And this is all governed by the state of California. Okay. So that is a operating agreement for an LLC. Now I kind of have a fill in the blank one here. So there's going to be a single member LLC or multi-member LLC. And this particular agreement, I think I'll send it off to Lauren, so she has it. It's one of those where you can just kind of fill in the information, but as always, I would state you should go to a business attorney. If you don't have an operating agreement in place and you have an LLC or a shareholder agreement in place, you need to get one in place. Okay, and understand what's asking. So once again, we're talking about capital contributions, and all should be recorded in the ledger so we know who's contributed what. All right, in this case, we're listing out the initial capital contribution of each member. Okay, and there's ways about how those contributions can be withdrawn. All right, how it's going to be managed. So here's a multi-member clause about how it's going to be managed. Okay, so all decisions respecting the management, operation, control shall be made in accordance with this agreement by affirmative vote of the members, a majority vote of the members. That means, although LLCs are not required to have a board of directors, they should have member meetings and take votes on certain matters. And if you have 2 or 3 people as part of your, or more, as part of your LLC, and you're not having member meetings and taking notes, although it's not required, you should be. It's not required from the perspective of the state of California, but your agreement may require you to do it. So know your agreement, okay? And no member, without prior written consent of the unanimous vote or consent of the members, shall exchange, lease, assign, or otherwise transfer any of the assets of the company or lease, etc. So know what your agreement states, so you're not in violation of your agreement. This is what leads to lawsuits. This is why owners and businesses, when they, let's call them partners, although it's not a partnership agreement, co-owners get in trouble because they don't read their agreements and they don't know what they can and cannot do. And then it's up to court to interpret this language and who's at fault. Okay. And you have to understand how distributions are to be made. Okay. Now keep in mind, you are responsible, if you're a pass-through entity, for paying taxes for the profits of the business, whether or not the money comes out of the business to pay for those taxes. Thus, if you're a member of an LLC, at a minimum, there should be a clause that states that your distribution from the LLC will cover your tax liability associated with your representative share or ownership of that LLC. There's no requirement legally for an LLC or any other pass-through entity to pay you for your tax liability unless it's in writing within the agreement. Okay. Let me move on from here. So you can see it's a selection as to whether or not it's a single member or multi-member LLC. And there should be an accounting of what's happening in that LLC every year. You have to report it in a tax return anyway, because there's an informational return filed with the IRS. There's a return filed with the state of California. And if an LLC has not elected subject as taxation treatment, and it's a multi-member LLC, then it's taxed as if it's a partnership, and the amount of money generated by that profit is allocated equally, not equally, apportioned based upon the ownership interest, and you have to pay taxes against that ownership interest. Do we have some questions, Lauren?
We do, Mike. So we have someone who says, does a tax extension apply to nonprofits, 501c3s as well?
Yes, and you can do a Google search, yes.
Perfect.
Yes. Any other questions?
It says, do you have to file for an extension if you want to send in taxes until October 18th, or is it automatic?
No, it's an automatic extension. You know what? I'll give you the link that I have. I'll put it in the chat room, and everyone can read it for themselves. Any other questions related to what I'm talking about?
Can you repeat the name of the insurance you mentioned?
Directors and Officers Insurance. Okay, D&O. It's referred to as D&O. And I've put the link regarding the announcement of the extension of the taxes into the chat room.
And lastly, I have 2 people asking for the fill in a blank operating agreement.
I'll send it to you.
Okay, and I'll share it.
And then you can go ahead. If someone writes to you, you can give it to
Perfect.
them.
So if
Okay,
anyone's interested, go ahead and shoot me an email and then I can get it over to you. Mike, one more person says, I filed an extension for a small business. Can the SBDC associate file taxes for me?
you answer that question.
We can assist you with it, is my understanding, but
No, we cannot, we don't do direct
we don't
service. We
file.
can't, no. Let's be very clear. I'm gonna stop the share.
So
Yes,
it's if you have questions, right? We can
yeah,
assist with that, but
yeah,
go
but we
ahead.
don't do direct service. We can't take on the liability. We can't draft agreements for you. We're not gonna file your tax returns for you. We can provide you resources. We can direct you to people who can do those things, but no, we're not gonna take on that liability. Okay,
One more just came through. Can you please recap the preference or the reference, excuse me, you mentioned about tax liability and LLC members and what needs to be included in the LLC to cover tax liability?
that's a good question.
Yeah.
So when you're a member of an LLC, an owner of an LLC, you are required to pay taxes against the profit of that LLC, whether or not you get money out of the LLC. So at a minimum, the LLC operating agreement should state that your tax liability, any tax liability for any member, there will be a distribution of profits to cover your tax liability associated with that LLC. All right. So if the LLC has $1 million in profit, okay, and there's no distribution to you, and you're a 50-50 owner, you're responsible for paying taxes against $500,000. And if the LLC is not paying you for your tax liability, then it's on you to pay it. Okay. That makes sense, Lauren? Right. So be very careful about what you sign up for and understand what you're signing up for. Okay. So in this case, it's saying during each fiscal year, the net profits and losses of the company and each item of income, gain and loss, etc., shall be credited, charged, as the case may be, to the capital accounts of each member, right? The net profits of the company from capital transactions shall be allocated in the order of priority. The bottom line is, this is covering that. I'm not going to go through all this, but it's covering that particular issue, okay? And down here, lists how the cash receipts are going to happen. They're going to cover loans, all right? That's liabilities, okay? They're going to be some sort of cash reserves, all right? And that's how they're covering it, okay? And there's some more information here. Always go to a business attorney to be sure it's appropriate for you, okay? Now, let me go down here. There's the books and records. Basically, you have the right to the books and records if you are a member of an LLC. If you're not checking the books and records of an LLC that you're a member of, or a corporation if you're a shareholder, then you're doing yourself a disservice. You should be getting financial reports at least once a year for any businesses that you own. That'd be the appropriate thing to do so you understand what's happening with the business, okay? Now, look down here. Upon request, the company shall furnish to each member a current list of the names and addresses of all the members. You need to know who you're in business with, okay? I have been involved with situations and owners were asked, potential owners were asked to join an LLC, and they weren't going to be given the financial reports. They weren't going to be given the names of the people who are other members of the LLC. It's like, why would you do that? Why would you invest in a company you don't know who you're investing with, and you're not going to have access to the books? Makes no sense. So don't get caught up in that. Now, down here, once again, there's verbiage about what should happen with regards to certain things, right? So a member decides to withdraw, then some action has to happen, okay? Or if there's a liquidation, there has to be supervision. So understand how this all works. And the proceeds of the sale and all the assets shall be applied and distributed in particular order, okay, which all makes sense, okay? And this is covered under the IRS Treasury Regulations, Section 17, 1.704, 1B, 2B, right, listed right there. Okay. So that is a shareholder agreement. Oh, registered agents. When you form an entity, you are required to list a registered agent on your articles of organization, or your articles of incorporation, or your partnership articles. And that registered agent is also listed on your statement of information, which is due within 90 days of the formation of the entity, and it's due every 2 years for an LLC, and it's due every year for a corporation. The costs for a registered agent, it's $40, $50 a year. You can be your own registered agent, but I don't recommend it because they're there to take lawsuits on behalf of the entity. So my recommendation is to utilize the services of a professional registered agent. There's lots of them out there, okay? Because it is their physical address that is listed on the California Secretary of State business name search site. Otherwise, your address is going to be all over the place. Plus, they take lawsuits. You don't want someone coming to your home delivering lawsuits on behalf of the entity. Plus, the registered agent must be available during normal business hours and days. If you're in a trip to Hawaii for 2 weeks, you're not available. That's your technical violation of the rules. Okay. So a registered agent is really important, and they're not expensive. And the next time you file your statement of information, hire a registered agent first and use them as your registered agent on the statement of information form. Okay. There needs to be a business bank account. This is stating that there's a requirement to have a member meeting. That's not an IRS requirement. That is not a state requirement. But this agreement is stating that is a requirement when you have an LLC. Okay, and it should be noted and memorialized through minutes, etc. Okay, and if we continue on from here, this has to do with whether or not someone can assign the interest to someone else. The answer is no, unless there's some sort of agreement by the other members. Okay. And this talks about ownership of company property. Here's the right of first refusal. This is extremely important. Okay. Your document, your membership agreement, and your shareholder agreement should always have a right of first refusal. Because not everybody wants to stay in an LLC. Sometimes they want to get out or in a corporation. So make sure there's always a right of first refusal. Okay. And this talks about, this is the on-ramp. One was an off-ramp. This is the on-ramp into the business. How are we going to bring in new members? Okay. That's what this is talking about. Move on from here. What if somebody wants to withdraw? What if the member can be expelled? All these scenarios do occur, and I've run into them. And then it takes a lot more time to correct or interpret these agreements as opposed to getting them right in the first place, which is why it's always saying, go to a business attorney up front to get the agreement done. That's the most important thing aside from a business plan, not filling out a form on the California Secretary of State site. Okay, a 12-year-old can do that. Then there's a certificate should be issued indicating membership. There's various information regarding notices. This is saying there's an arbitration clause. Okay. So that is a model agreement for an LLC. Now, when it comes to corporations, you need a shareholder agreement. This is a fill in the blank shareholder agreement. I'll always say, and I'm going to send them all to you, Lauren. Okay. But here's the disclaimer. Don't just fill these in. Always go to an attorney and be sure and meet your requirements. Okay. So with a shareholder agreement, first of all, I have to have shares. There's no shares in an LLC. Sometimes they call it units, but there's no shares. Okay. So you're going to list the shareholders, the state of incorporation, and the number of shares or the percentage of ownership. Okay, the number of shares and the percentage of ownership. There needs to be a board of directors and a minimum of 3 because you need a deciding vote. Now, someone on the board of directors doesn't have to be an owner in the business. Okay, that's not a requirement. Oftentimes they are. Okay. And when it comes to corporations, there is a requirement to have at least one annual meeting and to keep minutes of that meeting. If that doesn't happen, even if it's with yourself, you should be doing this. And I'm not making it up, because you are held to the same requirements as Coca-Cola in many ways. And Coca-Cola has millions of shareholders. So the shareholders elect the directors. The directors appoint the officers, CFO, CEO, through resolutions, by the way, written resolutions after having board meeting. And the officers hire employees. You may be serving all of those roles. And even if you are serving all of those roles, you still have to document every action, such as you electing yourself to your own board of directors, you as a board director appointing yourself as CFO, CEO, etc., and you as an officer employing yourself as an employee of your own corporation. Those requirements do not go away just because it's you or you and a partner, okay? So the board of directors decide on certain things. They decide on the bank account. They decide on the location. They decide whether or not they're going to elect subchapter S taxation. There's all sorts of things that the board of directors sign off on, okay? So they have to adopt the actual bylaws. They have to adopt the corporate seal. They have to appoint someone to keep the records, such as the secretary, and who's going to handle the books, okay? They can't be in breach of what's referred to as prudent management, okay? They have to act in the best interest of the corporation. And in this case, we're going to have a president, a vice president, treasurer, and a secretary, okay? And there's a clause here regarding the approval of all shareholders, all right? Now, shareholders may be employed as officers of the corporation as long as they hold shares of the stock. Remember, the shareholders appoint the board members appoint the officers hire for employees. That's how it's work. And you may fill all those roles, okay? And you have requirements for each of those roles. All right. There's a non-competition clause here, which makes sense. Why would you want to compete with your own corporation? Right? There's a trade secret clause, makes sense. There's a clause here about how net income and loss is going to be issued, right? How it's going to be distributed. There is a clause here about a shareholder loan. So if you loan money to your own business, and you're a shareholder in that business, you should record on your accounting records the fact that you have a loan. And it should be a formal loan agreement with interest stated and payment terms. Otherwise, it's really not a loan. Okay. Now, there's a dissolution clause here. And again, there's a formal process by which you go through a dissolution. It has to be a filing with the state of California, et cetera. The board has to agree to it. And there's all sorts of things that have to happen. And then there's the distribution of assets should there be a dissolution, okay? So this is the shareholder agreement, not the bylaws. Keep that in mind, all right? And there's restrictions on transfer. Here's the buy-sell agreement, okay? Now what's not stated here, okay, is the value. So let's say we're 10 years down the line and somebody passes away. Well, what value is going to be placed on those shares? Maybe that company has grown to $1 million, $2 million, $3 million, $5 million, $10 million in revenue. There really should be a valuation placed upon the business by some methodology, okay? And here's the right of first refusal. And then there's an arbitration clause, or this dispute resolution clause here, okay? So that's a very basic shareholder agreement. Here's the bylaws, okay, a simple bylaws document. So once again, it's formed pursuant to the California General Corporation Code. Remember, there's different corporations. There's general stock corporations, there's close corporations, there's professional corporations, there's nonprofit corporations, and there's different, there's B corporations, public benefit corporations, the social purpose corporations. When you file your articles of incorporation with the state of California, it's a form. You have to select the correct form, okay? This is the bylaws for a general corporation in the state of California. It's kind of more like a fill in the blank one. Once again, talking about a registered agent, okay? The corporate seal has to be adopted by the board of directors. The board of directors has to adopt the bylaws. There must be an initial meeting of the board, okay? And again, there has to be annual meetings, unless it's a closed corporation. Closed corporations, you don't even need a board of directors. You don't even have annual meetings, okay? If you're going to elect subchapter S taxation, as you can, whether or not your corporation, LLC, or partnership, the board has to approve that, okay? This duty is important. Each director is required to act in good faith with reasonable and prudent care. There's that term, prudent care, prudency, that comes up in legal cases all the time. Did someone act with prudent care? Did they act in the best interest of the corporation? Okay, if you don't, there's a problem. All right. Oftentimes with the board of directors, if it's a bigger one, like the Coca-Cola, there's an audit committee and there's a compensation committee, and there's a whole bunch of committees because Coca-Cola board is huge, right? A smaller corporation with 3 or 4, you may not have any of those committees, but oftentimes boards of directors do have committees, and they report to the total board, the whole board, with regards to certain recommendations. Okay. Now, directors can be removed depending upon whether or not they're in compliance of the rules, the prudent rule, and it's pursuant to section 301 of the law. Okay. And the number of directors can be changed. This is 14 pages. This describes how vacancies are going to be filled, when are the regular meetings are going to be held, how they're going to be held, are there going to be special meetings, what actions can be taken without a meeting, how are notices. This is important. You have to notice formally to the directors when meetings are going to be held. Okay. And there has to be a quorum, registered dissent. So what I'm telling you is, if you have a corporation and you have not read through it and understand what you're required to do and what all these clauses are about, you need to do it. For example, how many of you issued stock certificates? Okay, you should be issuing stock certificates if you haven't. You should be keeping a stock transfer ledger. Okay, and the stock certificate should name the corporate name, the name of the shareholder, the class and number of shares. There should be a signature of 2 officers in this particular case. If you haven't issued stock certificates, then how are you going to show proof that you have ownership stake in the company? Yeah, maybe you have an agreement, but a stock certificate is definitive proof, as long as it's not fraudulent. Okay. And, typically you won't have fractional shares. So all I'm saying is read your agreements. And this talks about, how the meetings are going to happen, how they're going to be recorded, etc. All right. And there's going to be a secretary, there's going to be a president, there's going to be a vice president, and the secretary is going to do certain things. It's going to issue notices for all meetings, accept our requests, accept proxies, keep the minutes, and so on. Okay. So that is the bylaws. That's the shareholder agreement. Now we get the partnerships. So there's 3 types of partnerships. There's general partnerships, limited partnerships, and limited liability partnerships. 3 types of partnerships. A general partnership is like a sole proprietorship, except it's worse. All owners in a general partnership are subject to unlimited personal liability, not just for their own actions, but also for the actions of every other partner. In my opinion, you should never, ever be a general partner, because you can never control the behaviors of anyone else. And although I'm showing you this agreement, I don't think you should ever be a general partner, even if it's an agreement like this. Okay. However, this is what a general partnership looks like. Once again, every contract or agreement has definitions. Okay. It lists out all the definitions here. And then, there's a name, place of business. Now, in this case, they're going to hold, manage, operate, develop, sell, and lease real property. Okay. Now, certainly in a case where you're buying and selling property, there's no way should it be a general partner. There's too much risk. Okay. But once again, the capital contributions are listed here for each partner. Okay, needs to be maintained, etc. Partnership interests, and so on. And there's a discussion about how the profits are going to be distributed, how it's going to be managed, what are the salaries are going to be, who's banking is going to be. All right. So this is just a general, typical partnership agreement. Limited partners. Despite its name, a limited partner contains a general partner. The general partner, think about a development. So the developer will serve as the general partner, and the general partner takes on the day-to-day activities. The limited partners put money into the project, but they have no say in the day-to-day operating activity. They just say, hey, go make us some money. And the general partner takes on all the liability. Okay. As I said, don't ever be a general partner, in my opinion. But if you have the opportunity to be a limited partner and you feel it's a worthwhile investment, sure, why not? So in this case, the purpose of the partnership, again, it's a fill in the blank type of form. So engage in the business of, let's say, developing properties. All right, you need to name a place of the business, the date, who the name of the general partner is, who's the original partners, and what's going to happen how we're going to admit other partners. Okay, how we're going to admit other limited partners. Let's describe it again. It's the on ramps and off ramps to the business, right? This is listing capitalization of 1.25 million. So each partner shall contribute 12,500. So there's enough people contributing into this, so they get to 1.25 million for 1% interest. Okay, so this might be a solicitation to someone saying you want to get invested in this limited partnership. There you go. Put in your $12,500, get 1% interest in the partnership, and if the partnership does well, you get your investment back and then some. That's what this is about. Okay. But the general partner's determination will be binding on all partners. Okay. Remember, the general partner may determine the amount of additional capital required and may require each partner, general and limited, to contribute a proportionate share of additional capital. Know what you're getting yourself into. Okay. To me, that's a red flag. Understand, unless you understand what they're asking you. Okay. And they might put a call in for additional capital. That's what they're talking about here. There's a call. There's a call notice. All right. And then there's more information about if someone's in breach, what's going to happen to their shares, etc. All I'm going to say is before you get involved in any sort of partnership, get a lawyer involved. Let them review it so you understand what you're getting yourself into. Okay, because there's all sorts of clauses here that are going to impact on your financial life. So always understand the agreements you're getting yourself into. Okay. I'm not going to go there. So I'm going to stop there. Any questions thus far? Let's see. If we are a single member LLC, do we still need the tax payment liability verbiage? Yes. You should always have that in there. If I started as a sole proprietor and now want to become an S corp mid-year, will I need to file 2 sets of taxes? Yes, because you have now changed your tax structure. Remember, there's legal structure and tax structure. Legal structure is established by the state of California. I'm going to share my screen because everybody gets confused by this. So let me go ahead and go with that now quickly. And you'll see what I'm talking about. Oh, no, that's contract. Sorry. Give me 1 minute. There we go. Okay. I'm going to take you back to 1776. At that time, the colonies, the United Colonies, signed the Declaration of Independence. And there's a clause in there that says that these United Colonies are, in a right, ought to be free and independent states. We're absolved from allegiance to the British Crown, okay? and the state of Great Britain. Notice the words that we are free and independent states, and that we are all political connection between them and the state of Great Britain is and not to be totally dissolved. And then as free and as independent states, we can contract alliances, establish commerce, etc. So at the time when this was signed, the thought was, and actually happened, that the states were countries. So between 1776 and 1788, when the Constitution was ratified, the states were acting as independent countries. Yes, they came together with France to defeat Great Britain. Now, we get to 1787 and 1788. The Constitution was drafted in 1787, ratified in 1788. New York was the last state to ratify it. Hamilton, who wrote most of the Federalist Papers, I think there was 82 of them, stated specifically in Federalist Paper number 31 that the state governments by the original constitutions are invested with complete sovereignty. And his argument was they shouldn't be, okay, that we should come together as a nation. And he won that argument. So we are left with vestiges of colonialism. This is the only country I can find where this happens. And then we got the Constitution ratified in 1788, where we got the Congress, we got the Senate, we got the presidency, we got the Supreme Court. And it says the Congress shall have power to lay and collect taxes. So because we have these vestiges of colonialism, we register our legal structures with the state of California, or the state that we're in. But tax structure is established by the IRS. Don't confuse the two. If you're to set up a business in France, the legal structure is established through the government of France, and the tax structure through the government of France. We're unique in the world in this respect, and it gets confusing because we have two different structures. We have legal structure and tax structure. So an LLC, corporation, partnership is registered as a legal structure in the state of California, but the tax structure is determined by the federal government, not by the state of California. Thus, when someone says that they have S corporation tax status, what they mean is they've established some sort of corporation, and they have elected subchapter S tax treatment under the Internal Revenue Code, which is defined by the IRS and the federal government. An LLC can elect subchapter S taxation. A partnership can elect subchapter S taxation. An LLC can elect subchapter C taxation. These are all chapters in the Internal Revenue Code. So please keep straight the difference between legal structure and tax structure. And I know it's confusing, but that's just the way it works in this country. Any other questions? If my husband is a disabled veteran, do I need to make him a shareholder or director not qualified as a minority-owned business? Yes, he needs to be a majority owner of a minority-owned to qualify as a minority-owned business for a disabled veteran. In that case, he's going to apply for your business would qualify for many certifications. There's veteran-owned businesses, disabled veteran-owned businesses, etc. How do you officially dissolve a general partnership? First of all, you have to have the partnership get together, partners agree to that, and then make an appointment with one of us, and we'll help you do that process. Any other questions? No. Okay, so we're concluded for the day. Hopefully GB will be back next week. And thank you so much for joining us today. I appreciate it. Bye, everybody.